Nope. That's better. This is your style. Sometimes you correct people's style, you say, well, don't practice this, my style. Somebody wants it to sit, you know, screwed, and then you shouldn't mess around with it, you know. If that's your style, that's your style.
No, it was just morning mess.
Everything is fine.
Yes, great.
Just 2 minutes left.
Okay, you just give me a signal.
Sherry, you want to say that we're stopped out in
I'll do it.
I'm here.
stopped out in House Swiss?
What were you stopped out on?
House Swiss.
Huh.
Well, why should you start loading up some slides? Yeah. You know who chocolate?
Is that it? Alrighty.
Yes.
Good morning and welcome to Saxo Bank's live market call. Today is Thursday, November the 8th. We had a long string of data coming out yesterday. We had German industrial production coming out at considerably better rates than expected, showing some healthy growth or industrial expansion in Germany. Likewise, we had pretty positive figures coming out from the US, somewhat surprisingly positive figures. We saw both non-farm productivity levels going higher as well as unit labor costs going lower, so overall indicating greater sort of efficiency levels in the US. At the same time, we had American crude oil inventories showing a much smaller draw than what was expected, roughly half the draw than what was expected. So that explains the light sell-off or correction lower in crude prices. In Japan, during the Asian session, we had some pretty terrible figures actually. The machine orders coming out at minus 7.6 for the month over month, and this was against an expectation of only minus 1.5. So that was indeed a rather negative signal from Japan. Later in the Asian session, we had Australian unemployment rate coming out as expected, or nearly expected levels at 4.3%. In the markets, we basically continue to see dollar weakening. This especially picking up speed after a Chinese official or a politician coming out and saying that they would need to diversify their FX reserves. We've seen cable now trading over 2.10. Euro dollar is toying with 1.47, which is already broken once, and dollar yen has briefly touched 112, only to rally subsequently. On the fixed income side, U.S. Treasuries are rising for a second day on falling stocks. JGBs are extending their 3-day gains, and European bonds are gaining on a second day raw. On the equity markets, we've seen losses across the board. All Asian as well as American indices closing lower, and almost all European indices suffering setbacks. In Asia, we are basically experiencing a 12-week low in Asian indices. Commodities, as mentioned, the crude has corrected somewhat lower on the inventory drawback being smaller than expected, with precious metals trading sideways after massive rallies, massive 5-day rallies. So what's going on in the marketplace? As mentioned, the dollar weakness continues, possibly entering its final chapter. And this has been propelled by the Chinese official stating that the country would need to diversify its very large FX reserves totaling $1.43 trillion. As a result of this, as mentioned, cable has been trading at a 26-year high, touching briefly 2.1072. Equity indices, as mentioned, have taken large losses, and this was basically after news from Morgan Stanley, the second largest U.S. securities firm, joining Merrill Lynch as well as Citigroup in writing down very large losses in relation to subprime mortgages. Morgan basically announced that they had lost $3.7 billion in 2 months through October 31st. On the calendar item, obviously the big events today are the rate decisions from BOE as well as ECB. The consensus is for no change from both of those banks. ECB is expected to keep rates at 4% and BOE at 5.75%. Additionally, we will have Canadian new housing price index out later in the afternoon, as well as U.S. continuing claims. From UK later in the afternoon at 15:30 GMT, we will have leading indicator and coincident indicator coming out. In the upcoming days, we have industrial production coming out from Japan on 9th of November, so that'll be interesting to see what the figure is after those terrible machine order figures. On the same day, 9th of November, we have the Norwegian producer prices and string of CPIs, as well as UK trade balance. On the FX side, we have taken a long position in dollar Hong Kong. We went long at market at 7.7654. Hong Kong dollar is closely pegged to US dollar, so it trades in a band of 775 to 785, and we believe that the prices are creeping towards the higher end of the band, as Hang Seng is looking to correct much lower, and as dollar weakness is basically starting to ebb. For new longs, we recommend that take new long positions at market, or try to buy dips if any are available, with a stop at 7.7490 offered. As mentioned, the equities have suffered great losses. So we are looking at S&P 500, and we basically take the approach that any rallies towards 1500 level are selling opportunities. So we are selling any rallies indeed towards 1500, with keeping a stop just above that level at 1500. That is it for me today. Thank you very much for joining us. See you again tomorrow.